Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey trading friends, checking in on the broader market before we get into it. Want to give a shout out to Chart Guys members Julian, who's got his own YouTube channel, and he's got a video on Kodak, which is now relevant. Kodak has been going through a whole bunch of volatility recently. He breaks down the story as to why. And today we had another little mini short squeeze out of nowhere in Kodak. So I will link this video in the YouTube comments. Check it out. He's got other good videos as well. Kinetic Finance is the YouTube channel. SPY, all-time high. Congrats, bulls. So we did end up with a good bit of weakness first thing this morning. And I did end up going short with SPXS, the leveraged inverse ETF, and I waited until all three sectors were going down at the same time to go bearish. They did. I went bearish, and I then ended up exiting with a very small loss. So exited half the position when the 5-minute trend changed back to the bulls, and what kept me a little bit cautious, not overly aggressive bearish, was knowing that QQQ was just looking for an hourly higher low. So I am perfectly fine with this trade. I love the example of this trade for a number of reasons. Number one, it was just a very simple if-then statement. If all of our sectors are dropping, then I will enter bearish. I did. We dropped a decent bit. Had a little bit of profit. Would have been a 3/4 of a day maker had I locked it in at the low of the day. But what it does is it puts me in the position of low risk, high reward. If this was a notable drop, another reason why I went bearish was this was the double top to the penny with the SPY level that was hit previous all-time high. Again, if you adjust for the dividends, we would have broken it, but to the penny, that wasn't a coincidence in my opinion. But it gave myself exposure for the potential of a big win. In the end, it ended up being pretty much break even or a small loss. I think I may have lost a 10% of a day maker, and I gave myself positioning for a lot more than that. So that's how I enter every single trade, or that's how I try and enter every single trade. Ended up locking in Tesla profit from the gap up open pre-market this morning. And that's pretty much what my trading day was. So in the end, SPY, hourly high or low, anything above the low of today. We did break the low of yesterday's support, but again, no bear follow through. Double top, 339.07, 339.10. And again, you look back at history, 339.08 was the previous all-time high, and the futures chart has not hit the all-time high yet, but technically speaking, SPY is at an all-time high, SPX has hit an all-time high, and it's just futures that needs a few more dollars for the all-time high. The bottom line, the bulls are in complete control. What do we need to see for that to change? I need to see SPY break our new line in the sand level, 332, which we are currently 2% above. IWM, no follow through. We tried to set the daily higher low and see continuation, and the bulls failed to see continuation. So the higher low was 155.87, and we broke that level by 16 pennies today. Could you call this a daily downtrend now with a lower high and lower low? Yes, you could say that. But if we don't get bear follow through, it's a potential little weekly bull flag. So the burden of proof is on the bears to see a couple red days in a row, show us some bear volume, and see follow through. Because if we don't, it is very healthy weekly consolidation. QQQ all-time high, convincing. Bulls in full control there. Today was the Amazon show. Amazon is looking to test all-time highs tomorrow after pretty healthy sideways daily consolidation. Google all-time highs are back in the picture here. We're less than 2% away. Tech sector, still very strong. And again, the weakness on QQQ, we saw it this morning. It dumped with SPY, but all we have to do is zoom out and say, well, anything above the low of yesterday is just an hourly higher low. It ended up being an hourly higher low, and the hourly uptrend continued. Healthcare sector, all-time high, failed to break today by 1 penny, but anything above 105.13 keeps the bulls in full control. So we'd have to see 105.13 break for it to mean anything. Financial sector still not finding a daily higher low. Glad that I stopped out at 24.93 from my half of a swing position that I had remaining. We're still looking for the daily high or low, and there is still no sign of it. And what stands out is the close at the low of the day 2 days in a row, showing bearish momentum. Have to see an hourly trend change back to the bulls. And what I'm going to be watching for the next couple of days is for QQQ to see healthy daily consolidation while XLF tries a daily bounce. We know they've been trading inverse to each other pretty consistently over the last 7 trading days or so. And we'll see if that continues. Biotech sector, we knew to be watching for a lower high compared to the wall of resistance in the mid 115s. We topped out today at 114.59. If the bears can confirm an hourly downtrend by breaking the low of today tomorrow, we will say our lower high has been set, and we will continue to watch this really nice daily equilibrium tighten up. There's a lot of daily time frames that are favoring tightening ranges through the rest of August. We have 9 trading days left, I believe, and XBI may be one of them. SMH, all-time high today, but again, not a ton of convincing follow-through. You can definitely draw a rising wedge on this chart, as the bull breaks are not convincing. That being said, the bears are nowhere to be found. So, not convincing bull breaks, but bears doing nothing. Anything above 166.74 is a daily high or low. And the VIX in our falling wedge channel. Things are going to get interesting soon. Watch for a spike. Spike has to last more than just one day. But we don't have a whole lot of room here. We could probably trade within this channel for another 4 days at the most, I would say. Gold. So gold, what was also notable for me and a reason that I went short in the S&P 500 is we saw everything doing, all of our assets doing the same thing. SPY dumped, crypto dumped with it, gold and silver dumped with it, and even oil saw some weakness with it. So whenever I see everybody doing the same thing, I'm going to jump on that and try and see some follow-through. If there's no follow-through, I will exit for a small loss or a small win. If there is follow-through, it's a big win. So gold with a V-shaped recovery. It's still in a 4-hour uptrend. We are watching for a daily lower high compared to 2075, but we're not going to set that daily lower high until we lose the 4-hour uptrend. And the bulls are hoping that 1976 is our new 4-hour high or low. Silver's the same thing. 4-hour, trying to form a higher low at 2710. Looking for a daily lower high, but not enough bear follow-through. The V-shaped bounce really helped the bulls. It's actually an hourly equilibrium on silver. It's a bit more clear than the hourly for gold. Similar. High, low, lower high, scouting the higher low. Silver's just a bit more visible. Miners saw way more profit taking than the metals did today. Temporary top on those miners. We knew to be watching for a daily lower high as the most likely scenario. That's potentially being set. What stands out? The bounce on the hourly, way weaker than all of the other assets I just mentioned. Volume, all bears for the first 2 hours, and non-existent bull volume on that bounce. And if we break the low of today tomorrow, hourly downtrends will be confirmed, which means zoom out and look for a daily high or low. And miners are one of the sectors that we're going to be watching for potential tightening daily ranges through the rest of August. Bears need a little bit more follow-through to convincingly set that lower high, confirming the hourly downtrend would do it. Natural gas bulls continuing their run. Very strong, 4-hour, potential bull flag right now after bouncing off the exponential support. No red flags. Next time we consolidate on the daily, we're going to look for a higher low compared to 205. Natural gas bulls keeping their control. So here's the Kodak short squeeze that was short-lived. The bounce on the 5-minute time frame was the exact same as SPY. High of the day, the low of the day happened when SPY started bouncing. We had this same period of consolidation. SPY was consolidating right here. This is a perfect cup and handle. The most misdiagnosed pattern that I see on social media is the cup and handle. The left side is lower than the right side, showing an inability to break resistance. Healthy bull flag consolidation after that inability to break resistance, and then a massive breakout. And this is a short squeeze. No news, massive, 100% move from the low of the day, and a lot of halts. But bulls gave it all back. Just a short squeeze, and once all those shorts are forced to cover, who's going to be buying? The answer is no one. Hope you had a good day. We'll end it here with a crypto video, but it certainly is fitting for the S&P 500, so we'll give the bulls their time to shine. We'll see you tomorrow. Have a good rest of your day. The Chart Guys. Technical analysis. No FUD, no FOMO. Bitcoin, Litecoin, Ethereum. All-time high.
Lift off.
Trade like a robot. Higher low, lower high. Are we in a bubble? The bulls versus the bears. Stick to the chart. All-time high.